All right, everybody. It is 2:03, so we can get started. Thank you and welcome to the Beekly. This is a product deep dive, which means for the next hour or so, I will tell you all about the product that exists today, the roadmap, the vision for Beehive. As always, the goal here is to be very interactive. So the chat is open, the Q&A is open, and I certainly hope that you ask lots of questions as an opportunity to get to know where the product is today, where it's going. I see some of you here are existing customers, some are consulting partners, some are prospective customers. We got a little bit of everybody today. So ask questions. They can all be anonymous. I do not mind. And let's get into it. Okay. So here's what we're going to talk about today. We're going to just quick introduction of who we are, and then we're going to talk about the product, the roadmap, and the vision for three different modules inside of Beehive. I usually do four modules, a governance module as well. I'm taking this out of this month's because there's so much more to talk about with these three, and the governance module is sort of fully built, and there's not a huge vision to that one, but some of that will be discussed in these others. So again, always ask questions throughout. We are very transparent. You can ask about anything. Okay, quick introduction to who we are. So, my name is Adriel. Hello, I'm the founder of Beehive. As a reminder of what we do, for the most part, we help customers comply with legislation such as SB 261, and there's a lot like it around the world, which basically says that you need to compile a report in line with this thing called the TCFD. Some of the parts of the country call it IFRS. This guidance is very long. This is like the actual TCFD document. We've done previous webinars about the TCFD, so I can point you to those if you want to dive into all these beautiful 90 pages. But TLDR, you have to produce a document that looks a little bit like this one. This is Asana's as an example. All these TCFD reports have the same structure. They have four sections and 11 questions. So governance, strategy, risk management, and metrics and targets. And that is like the report that you have to produce. The traditional approach is working with a consultant. If you're using the Big Four, that can cost $250,000 minimum, no matter the size of your company. If you're working with somebody more boutique, it can cost 30 to 100K. But it pretty much always takes at a minimum like 8 weeks. And depending on the size of your business and the type of consulting you're working with, it could take many, many months. And our customers in Beehive basically get this work done in just a couple of hours. So that's the problem that we're talking about here. Now let's get into how we do it. So to get one of these reports, you basically need to do three things. You need to do a physical risk assessment. So what is your exposure to natural disasters today and in the future? You need to do a transition risk assessment. So what risks and opportunities exist to your business in an economy impacted by climate change? And then lastly, you need to like hands-on keyboard, write your report. You got to put together all the information in that specific TCFD framework. So we're going to go through each one of these modules one by one inside of Beehive. We're going to get really nitty gritty. Like this is not a sales demo. I would normally pitch this very differently. This is like a real like get to know the tiny little features inside of Beehive and what's coming. So I'm going to touch on like a lot of details so that folks on here who are customers can really like get to know some things they haven't seen before. So as I take, excuse me, I'm like on the last few days, I hope, minutes, I hope, of a cold and a cough. So you're going to be one of those. Um, okay. So physical risk. What is the problem that we're solving here? The problem is that physical risk assessments aren't data driven and they're limited in scope. What I mean by that is, for the most part, traditionally, when you work with a consultant to do a physical risk assessment, they are limited in scope, meaning if you have 100 locations, meaning 100 offices or facilities or construction sites or manufacturers or suppliers or whatever, they're not going to, a consultant can't run the assessment on all 100. It just takes like, it's too much work to say, hey, 123 Main Street, what is the wildfire risk at 123 Main Street? What is the wildfire risk in 30 years at 123 Main Street? What is the wildfire risk in 30 years if climate change is really bad or it's not so bad at 123 Main Street? Doing that work for 100 addresses, let alone thousands of addresses like most large companies have, if you include your employees, all over the world, is just too much work. So normally they'll take a sample size, maybe 10 or 20, and do it just for those. And so you have to select a sample. So that's what I mean by limited in scope. And by not data driven, what I mean is what often happens, and this is not always the case, certainly the larger consultants or the better resource ones have some tools of their own, but they basically go into free tools and they Google or they look up like what is the wildfire risk at this area? And they look at the FEMA map and they just say, I don't know, FEMA says low for the state of New York, so let's say low. Okay, but like state of New York's a big place. What if you're in Manhattan versus in the forest? Obviously, very different. So here's what Beehive does. We create what's called auditable and transparent risk assessments in seconds. So here's how it works. This is the Beehive product. A couple things that are you'll find interesting here. So first, customers can upload unlimited number of assets into the software. Facilities, suppliers, employees, any type of asset you want, you can upload it manually, or you can actually put together a CSV. It takes truly like seconds to upload thousands of locations. We have a customer today who's basically in the like chemicals industry, and they had 1,003 different sites around the world. They sent us latitude and longitude for those 1,003 sites. Dropped it in here. It was there in a second. That is like not common in a bunch of different ways. First of all, for a consultant to look up the latitude and longitude, I mean, I think you can even see, let's see if I can pull this up. You can see actually, I was just Googling latitude, longitude today. Um, oh, how do I see my history? Uh, it's not working. Well, maybe you kind of saw that. So you can see like looking that up for different latitude and longitude is really hard. It's a lot of work. Like, yeah, this is a little latitude and longitude in front of those customers. You have to find this, and then where am I? Looks like I'm in off the coast of Africa. Like, all right, great. Let's find the wildfire risk and the flood risk and the hurricane risk for this random little place off the coast of Africa. It's just really hard. And doing that 1,003 times is impossible. So whatever, this customer uploaded all these and you can see automatically you got a risk score for every single asset you put in here. And there are a couple interesting things. The first is we talk a lot about transparency and auditability. So not only did this all happen immediately where you get these risk scores, but you can get a lot of context to why we think the risk is what it is. If anybody wants to test this live, I always offer somebody can put in an address or a zip code, type it into the chat, and I'll do this live for you with one of your addresses. You can test the software. But what you're able to see is, hey, for this random office I have, we think flood risk is high and drought is high. But why? Well, here's the science behind why we say the flood risk is high. Because we think you're in a 50-year flood area and there's a half percentage probability of being in a 200-year flood area. We think drought risk is high because we think that annual precipitation is going to be in the 50th percentile, and uh, there's a 29% probability of moderate drought conditions and 15% probability of severe drought. Like we give you the science. And it's not that, you guys are, I see a lot of you here, you're corporates. Like I see some accountants, I see some SEC people, I see some admin people. You don't care about the details of this science. Like that's not the point is for you to understand what STEAMIP derived SPEI is. But the point is that as we do these assessments, audits are going to come into play. You can't just claim you have low risk for no reason. You have to have a reason why you're low risk. So that if you go out and you say, we're low risk, we did this evaluation, we decided that we're low risk. And then all of a sudden, a hurricane or a cyclone hits your most important facility and floods the whole thing, and you lose $30 million. Dollars. Your investors are going to say, hold on, you told me you were low risk. Why is that? What you don't want to say is, I don't know, I just kind of thought we were. That's not what you want to say. What you want to say is, look, like we have an auditable process here. Here's this location that we think has low risk. Where is this? Like we can see why here. Actually, you can see this on a map. It's because we're in Washington State. Here's what the cyclone risk map looks like in Washington State. They don't happen there. Here's how we did that. Now, if some crazy thing happens and all of a sudden, because 10 years climate change is insane and a hurricane happens in Washington State, I don't think it will, by the way, but whatever. If it does, you get to say, look, that was a shock. That was unexpected. But we did the work well to have this audited. So that's the point of that. And you're able to actually, this is new, you're able to download reports of any individual asset. So if you're like, this is an important facility for me, or this is where my CEO lives, or this is where my headquarters are, you can obviously share versions of this with anybody, but you can also download a report and this will show you for this office at this address, generated on this date. Here's the wildfire risk. Here's the flood risk. Here's the heat wave risk. And so you're able to like send this report around to people. So this is really helpful if you're sending this to like people on your facilities team or your real estate team who like don't want access to the software. or just like curious about this one thing, and you're showing it, and you're like, I want to look at it later. You can just click here, download report, and pull that out. So that's a new feature that y'all can use. So that's how that part of it works. It's audible, it's transparent, and it's immediate. But we try to take this a lot further. So what traditionally a consultant might send you is basically a spreadsheet that says, Office one, wildfire risk low, flood risk high, heat risk low, whatever. And you're able to get that spreadsheet out of here too. You can export this as an Excel file, and here, I'll actually show you what that Excel file looks like. We'll open this up. So if you export this out of Beehive, doo. There you go. So you get the Excel file, same thing. Office. Here's what risk. We're in the wildfire tab. Here's what it looks like under this scenario, that scenario, whatever. Here's cyclones, here's drought, here's heat. So you got to get that as well. But this is all like, who wants to look at this? Come on, like this is not. You have thousands of locations. You're not. You don't want to create pivots. What a pain in the butt. So what you can do inside Beehive, that I think is pretty cool, is understand this in a bunch of different ways. You can see this relatively visually. So you can say, hey, I want to see a risk map for North American wildfires. And I want to see what that's going to look like in 10 years under the worst climate change scenario. And actually, I'm focused on floods in Asia, and I'm preparing a presentation for my head of HR. So I only want to see employees and executives, and only those that have the highest exposure to floods, or maybe cyclones. And you can see this on a map. And this begins to start the conversation. So there's a lot of cool things you can do here. Is you compare regions across each other. You can say, "Hey, I'm thinking about opening a new office somewhere in this area. What concerns should I have if this is sort of the region I want to open an office in? But what do cyclones look like there? What do wildfires look like there? What do floods look like there? Great, maybe I should be a little off the coast, on the coast." And it's one of many considerations. Obviously, climate is not the only consideration you should have here. Cost of living, employee pools, like all that kind of stuff is really important, but this is one of them. It makes that really easy. Another thing you're able to do here, again, instead of going through that spreadsheet export and creating your own pivot tables and whatever, because that feels difficult, many people just want to know, like, high level, what do I need to care about? Like, what should I be concerned with? And so we have this reports tab, and there's some new stuff in here as well for those who saw this a month ago. So this reports tab, we basically tried to predict what kinds of charts you would want, customers would want, based on what they've been asking for inside of our spreadsheets already. And we built that all out. So you can come in here and very quickly say, what is the percentage of offices and factories? I guess I don't have that many offices. And let's add a couple other things. There we go. I should increase the number of assets I have in here. What are the percentage of these assets that in North America that have high risk or medium risk in the long term? Or what is the number of assets that have high risk from floods? Well, it looks like 82 employees and seven offices. Is that scary? Is that not scary? Well, as a percentage of all my assets, less about 10% of my employees and about a very small percentage of my offices have risk from floods. Less than 1% of my offices have high risk from floods. But if we want to increase that to high and medium, or we want to say flood and cyclones, obviously all these numbers grow. If we want to add heat waves, those grow. We can understand this in a bunch of different ways. So there's two things that are new here. First, you can download this. They're like, yeah, this is the chart I want to show. I want to show, my what am I at? I want to show like my VP of HR or VP of operations. Hey, like we care about all hazards, and here's the number of every asset that is at risk from these hazards. Great, you can download this, and you download it as a PNG file already. I don't think I can open this up from Chrome. Yeah, it won't share, but whatever. You can download this so it's easy to do, easier than just taking a screenshot. And then this table itself, this risk by asset type is new as well. This was requested a lot. We had risk by hazard type before, and you could filter by assets. So only show me these or those or whatever. This we had before. Now we added risk by asset type, where you can say, I want to see employees on the x-axis and only see assets rather on the x-axis, but break them down by hazard. And so you're able to do that now, and this is new. The last way that you're able to get some really interesting like insights from this is with AI. So a lot of your companies are asking how you're using AI to be efficient here. A lot of the work around climate risk, aside from compliance for a moment, is understanding what is your exposure and getting some of those insights and understanding what to do about it. So you can ask really simple questions here like which regions have the most employees at risk, and it'll pull out of your data and answer this for you in a narrative way. And this is really cool because this is things that you certainly can't do in a spreadsheet. You don't want to upload a spreadsheet to an unsecure AI or chat GPT or something where it's getting trained on that. Here, we pass all your securities. And so everything is like approved and it's all in this walled garden and there's no training or no memory. So everything sort of just answers it right away. It's taking a minute here, but you're basically able to use AI to pull out some of those questions. So maybe you want to ask specific questions here. It says like, looks like North America has the highest number of employees at risk with 506 employees, followed by Asia. And then maybe you can ask like, what should I do about my um, Asian employees at risk? How to mitigate. I'm always curious what it says when I test it like this. But you can begin to ask questions like this. What's also cool here is that part of the training, as an answer to that, that it's like has here is what's the right word here? Like documentation. It's like it's trained on relevant materials. So we have this documentation tab, which anybody can go to, beiclimate.com/documentation. It's part of our effort to have transparent climate models. You can see how we build every single model. And so we explain the methodology behind these things. We explain the research papers we use. We explain the data sources we use. We try to explain everything that we do to build any of these models as transparently as possible. And we fed all these research papers, this whole big documentation. We fed all that to the AI so it can give some information. And so here you go. So like you asked what you should do about your Asian employees at risk, and it begins to answer that, and it's giving you some advice, and it's trying to shift schedules, school hours, whatever. It's like giving you some ideas based on what you can do, practical next actions you can do. It's pretty good, pretty good. We like that. I like when this works. So yeah, the AI is this cool new thing that you can do that is very useful. We're investing a lot in improving the accuracy of this, making this more visual, whatever. We've actually been growing in popularity. It's fairly hidden, like you can see this little B here on the bottom is how you find it. So you have to know that it exists. And it's just hidden as we continue to make it better. But folks have been finding it and turning to it quite often. Okay. The last cool thing in physical risk is quantifying these risks. So what we did here so far is say, hypothetically, how many of my assets are at risk, or how many of my employees have high risks from wildfires? 20. Or how many of my offices or my franchise locations have high risks across all disasters? It's whatever the answer is. So you can find a lot of these high, medium risks, how it is. So you can find a lot of these questions, um, or you can find a lot of this information here, but it's like hypothetically, what are the issues? What many companies want to know, partially because you need this to follow some laws, but partially because that's how what a business needs, is how much will this cost me? So don't just tell me that I have, 288 employees at high risk from different disasters. Tell me how much it'll cost me. And traditionally, this is a very expensive consulting engagement on top of the initial thing that you already did. And it's very time consuming. In Beehive, it's all embedded in the software. And so there's a couple things that we lean into when we do this. We again talk about transparency and auditability. And so when we talk about transparency and auditability, the way we do this is, this is very similar. I won't go into every detail of this report, but the way you set up how we calculate risks is called custom equations. And this is really cool. What we mean by this is it is not our goal to tell you that your risk is $6 million because you won't believe us. You'll be like, where'd you get that information? You don't know my business at all. And that is true. We don't know your business. We're just a software company. What we do allow you to do is to create an equation that says for my offices or for my employees or for my data centers or whatever, how do you calculate risk? Maybe you calculate risk by saying cost per hour of downtime times hours of downtime. But maybe you want to change that, right? Maybe you want to go into your data center equation and change how you calculate that equation. So you come in here, maybe it's cost per hour downtime, it's hour downtime. Maybe you want to add some sort of repair cost per asset every time there's an event or whatever. And you want to save that. All right, so you save that, you add that in here. Let's save and finish. There we go. Now, next time we go to Azure data centers, or sorry, AWS data centers, where was there? AWS data centers, you'll see now we have repair cost per asset. And you're like, well, what is the repair cost per asset? Is it a dollar? Is it $10,000? $100,000? What is the cost per hour of downtime? Is it $50,000? Or are you a software company? It's actually really high. Maybe it's $500,000. And how would you consider your concern? Maybe like if you're in a very high heat wave area, you actually expect a decent amount of downtime. Maybe if you're in a high drought area, same thing. That's actually a huge problem for data centers. That can cost you a lot of money. But maybe if you're in a cyclone area, like you don't think that's a big issue. Whatever. This is your tool to create these calculations. And we give you guidance and we'll teach you how to do this and we'll tell you best practices because many companies haven't done this before. But when you bring this to your finance team, they need to know, how did you get this calculation? Like, why do you think this is what it is? So why do you think you can see these numbers all changed as I change the equations? Why do you think the risk is what it is? How did you get that? And how can I audit it and debate it? And so again, to be transparent, you can export everything. So when you click export here, you basically get an export that looks like this. And so it exports for every single asset that you have. It'll show you what was the equation that you used, and then it creates all these formulas in here for you. So your finance team can say, hey, like, wait a minute, I know this asset. You didn't realize, but we closed it recently. So I'm going to delete that cost. And you'll see as I delete this cell B3, which is a total calculation change. So I'm going to delete this. Great. So that changed. Or maybe you'll say, oh, actually, like you said it was $10,000, but you got that wrong. It's a really important asset to me. The cost here is $1 million. And great. So that changes. And so you're able to audit everything that we do here. And I think that's just really important because as you think about quantifying these risks, again, there's no right or wrong answer. This is not a guarantee that you're going to lose $2.701 million next year because of lost work days. This is ways to think about what your risk could be. Is 2 million high? Is 2 million low? Different companies will call it different things. For some 2 million, whatever. Who cares? $2 million for $1 billion business, cost of doing business, not a problem. For others, wait a minute. You might saying I might lose $2 million? Can I invest 100 grand somewhere to cut that in half? Maybe. Let's talk about that. It could be worth that effort. So we try to be very transparent about all that in quantification. And that's how we do it. We allow you to set up the equations, to adjust the parameters, and to export everything here. So I pause there. Happy to answer any questions about quantification. Otherwise, a couple of equations. Oh, otherwise, we'll talk about the roadmap. Okay, great. Let's talk about the roadmap. So there's three things. It's going to be a big month for the Eng team. There's three main things that we're working on. Let's go from easiest to hardest. So the easiest we're calling one world order, just because it's fun. Basically, right now, the way you look at risk on the map is like this. You go to North America, you go to Europe, you go to Asia, you go to Oceania. That's a pain in the butt. And now it's hard to compare. If you are a business that does a lot of business in Asia and Oceania, hard to compare. Like, well, this looks bad. Orange is not good, but like, is that much worse than here? I don't know. Let me fly to Asia. Well, actually, I don't remember. Oh, I don't remember if this is orange or yellow. Let me go back. Very hard. So we're basically moving this to be viewable in one big world view. So when you come in here, you'll be able to click wildfire and it'll show you wildfire risk for the entire world. You'll be able to click floods and it'll show you flood risk for the whole world. So you'll be able to zoom in, zoom out, compare a little more easily, see all your employees. So that's the first thing. The second thing that we're working on, we're calling it an asset refresh. So we now have customers who have been with us for well over a year, and the assets of the employees, facilities, offices, whatever that they uploaded sometimes a year ago are not always accurate anymore, right? They sold some offices, they got rid of some offices. They're a construction company and they have new sites, have old sites. The employees came and went. And so they don't want to just like delete everything and start from scratch, you want to save this for a bunch of reasons. You want to save this because maybe you want to get an audit on it later. Maybe because you actually published a report that said this information and you want a way to keep it in there. You could always export it in that spreadsheet I showed you, but like that kind of sucks. And you can't then if you export it and delete it, you can't use the reports or the map very well. So basically, we're creating a way to do an asset refresh, which basically will allow you to like save everything in here. I wonder if I have it open. Nah, I forgot to open it. It'll allow you to like save everything in here as a snapshot of your company and then create a new snapshot. So great, let's like save this so I can come back to it. I can get it audited. If anyone asks me a question about why did I report my risk is high or low, I just open this up to snapshot from Q2 2025 and I go back to it. But as I go into future versions of my company, I can keep everything up to date. So that's the asset refresh. Now, the third major thing, and this will be launching, a version of this will be launching sort of in private and then rolling out over the course of January and February, but it'll be launching in January. It's called Project Seasons. And we'll think of a better name when it's out, but Project Seasons is what we've been calling it. Now, I'm very excited about this. Everything that I've shown you so far, all of this stuff, all this wildfire map and cool reports and dollar impact, whatever, all this is a hypothetical. This is saying, in theory, I might lose $8 million from heat waves. In theory, AWS data centers around the world have a $10.5 million exposure. That's good. That's a good start. I'm happy we know that information. It tells me if I'm going to focus on anything, I should focus on AWS before I focus on GCP. I should focus on my data centers before I focus on my employees, whatever. But what it doesn't tell me is when should I be aware of these issues? Like, could my could my AWS data center get hit by a heat wave today? Well, I don't know. It's December, so probably not. Unless I guess I'm in New York, but maybe I have data centers in India. All right, I got to go in here and check, and I got to see, where are my AWS data centers? All right, looks like one in India, one in Germany. What is it? Southern Germany or Northern Germany? I don't know. I got to find the map, and I don't even remember. Like, does it get hot? No, I guess it doesn't get hot in Germany. Whatever. Hard to do. What we're going to allow you to do very soon is to answer the following question. You'll be able to come in here and you answer the question in a given period of time, which natural disasters are likely to happen? And if they did happen, how much money could I lose? And which of my assets would be impacted? And now this is going to be really cool for a few reasons. You'll basically come in here and say, hey, I care about Q1. I care about January through March. I'm doing Q1 planning. Well, what should I be aware of in Q1? Well, hurricanes. But where? Is there hurricanes everywhere in the world all at once? No. Only in these couple of regions. Oh, got it. In the Southeast US. Which of my assets are in the Southeast US? Oh, these guys. And across all these, looks like my Charleston data center has the most at risk. I should get in touch with the person in charge of my Charleston data center and find out if they have a good plan for hurricanes that might happen there. And when they come to me and say, "Yeah, why do I care about hurricanes right now?" You can go to his historical events page and say, "Here's every hurricane that has hit that Charleston area in the last." This will be different for different disasters, but the last like 25 years or so. And you're able to get a lot of context there. And so this is going to be really cool for two reasons. The first is good governance. So in this TCFD report I showed you earlier, I'll just pull it up again. The second question that everybody answers is what is management's role in assessing and managing climate related risks and opportunities? And what many people write is something like we review this on a quarterly basis or an as needed basis or a semi-annual basis, but they need something to review. It needs to be real, like somebody needs to review something. And so what this will allow you to do is to come in here once a quarter and say, what risks exist to me in the next quarter? Like, what should I be concerned about? What if you want to plan a couple quarters ahead? What if you focus on May through July? Great. This won't update because the data here is not live. But you'll be able to like change all this. It's all personal to your company. It all has those quantified dollar values from what we did together and that impact quantification. So this is going to be really cool. So this is going to launch again in early January. We're going to like debug it with some beta customers, and then it'll begin rolling out to customers throughout the course of January, February, and March as we continue to improve this. So this project seasons thing is a huge focus for 2025. It'll help you with good governance. Oh, and then I said there were two reasons. The second is like real risk management, right? The goal of all this stuff. I know there's a law, so most people care about complying with the law. But why is there a law? There's a law because investors want companies to have good risk management related to natural disasters. And to have good risk management related to natural disasters, you need to understand when these things might happen. They are sporadic. Like, there's no way to predict that a hurricane will hit Charleston or won't hit Charleston in October this year. But there's a way to say, if a hurricane were to happen in Charleston, when might it happen in these areas? And how much money could it cost me? And do I have the right systems set up? And are the right people aware of these things? So that's the goal here. And so I'm very excited about this. I'm happy to answer any questions here, talk about when it's rolling out or whatever. But when we do this next BI product demo sometime in January, I will show you this like for real in the product, clicking through it. It'll probably have a bug or two then. I don't know if we're going to roll it out in exactly 4 weeks, but certainly in 5 or 6. But very, very excited about project season. Okay, so we covered all that. And the last step, the vision here, where we're headed, everything in Project Seasons is cool because now you get something real and time bound. But the real goal here is I want BI to be able to inform our customers. There's a hurricane happening right now, and we think it's going to hit your Charleston data center. And here's the 6 things that you said need to happen if a hurricane were to impact your data center. People need to evacuate. You got to move the data. Yeah, these checks need to happen on all the locks and the windows. Like, go inform the right people that this is happening and trigger all of that immediately. And so that's where this is headed. It'll be years to really see this thing come true. But that's where we're headed. So like real risk management on the fiscal risk side. All right. Quick water break. All right. Water break over. Uh, perfect. Now, happy to come back if there's any questions or anything. But let's talk about transition risks. So, what are transition risks and opportunities? Transition risks and opportunities, I like showing this chart. Oops. There we go. So the TCFD defines 4 types of transition risks: risk in policy changes, technology changes, and market reputation, and 5 types of opportunities. These are things that can be good or bad for your business as the economy adapts to climate change. And the way this normally works is that, call it a tabletop transition exercise. It's very time consuming and it's not database. Meaning, what most consultants traditionally do for this process is interview a bunch of your executives. They'll talk to your finance team and say, "Hey, head of finance, tell me about how you think risks might affect your company in the long term." And this head of finance has never thought about this before. We'll start talking about climate change and saying, like, I don't know, like it'll probably stink. I'm not sure if it'll be good. I don't know. And then they'll go to your marketing person and say, "Hey, head of marketing, do you think there are risks or opportunities?" And your head of marketing will be like, "I gotta put out 30 blog posts, 4 webinars, and a case study tomorrow. You want me to talk about it? All right, like let's talk about it." And it's all these conversations that just takes a long time. It takes many months because scheduling this takes months, and it takes many hours because you got to run these interviews. So it's very time consuming. And so what you're able to do in the Beehive is a relatively immediate AI-driven transition risk assessment, and that you can decide the materiality of beyond that. And so what that looks like is the following. So instead of giving a consultant all of this information about your company and running interviews so that they can understand your business and them researching and benchmarking you against competitors, all of which takes time, that is exactly what AI is good at. So we give the AI a bunch of information about your business. We'll give it your ESG report. We'll give it your 10K. If you're private, we'll tell it to do a bunch of deep research on your website about your about us and your customer type and whatever. It'll tell us who your peers are. And so you can say, "Hey, I'm a lot like these companies and I care what they say. And if HubSpot and Pinterest and ServiceNow, excuse me, say something, then I think it'd be relevant to me too." We'll tell it what industry you're in. We'll tell it all this stuff. And then we'll say, "Hey, AI, go be a consultant. Go research this business, go research this industry, go research the rules of the TCFD, go research what dozens of customers and competitors and peers have said, and tell us what risks or opportunities you think are most relevant to your business." And then we run through this with a customer. We say, "Hey, normally what would take in 8 weeks and 50 hours of interviews? We did in 2 minutes. Let's talk about it. And so we go through this one by one. This weird little bug where everything goes black. Ignore that. We go through this one by one. And we say, hey, here's a risk that I identified. Do you think that this is a relevant risk? Here's some of your peers. Like this, you said, Braze is a peer. Here's how Braze said something similar. If you want to go cite the source, like here's where Braze said that. And I think it said it on page 18. So you can go here whenever this loads for Braze to page 18, and you'll see it here. So this is evolving customer and investor ESG demands. We'll scroll to page 18, and you'll see evolving customer and investor ESG demands. Like this is where they said it. This is how they said it. This is the context. So you're able to like do all that benchmarking stuff very quickly. And then you'll tell us like, yep, I like that risk. That is one I accept. Or no, I think something's wrong here. Like not relevant to me. Um, so reject that. And you'll go through all these one by one and say, I like this one, I don't like this one, I like this one, whatever. And you do that for risks, for opportunities. And then just makes this a much faster, much more interactive, and honestly, much more data-driven process. Because for all of these things, it'll tell you how this might impact Beehive. It'll give you peers who have said something similar, and it allows you to like have that conversation. This isn't saying this must be relevant to you, or even yet saying that this is highly material or not material. It's just like, let's have the conversation. Is this in your risk register or not? And then once it does this, then you have to go draft the disclosures, how to actually talk about this. And again, this is where AI does it for you. Actually, I can show you this live. So yeah, I'll show you this live. So you click review draft language. The AI does its thing here. There, that's actually pretty fast. Um, and then it drafted all of this language to say, if I were a consultant, here's how I would put this into a report. And again, you're able to change all of this. So like treat this AI. My line is always that you should think about our AI like a very hardworking, good student, went to a good college, got its MBA at a good MBA program right out of college, but had never had a job in between. This is his first job ever, and he still lives with his parents. Like, smart kid, hardworking, needs a little coaching every now and again. Coach it. If you don't like the language, change the language. If you think that the time horizon should be short instead of long. Change the short instead of long, or change the likelihood, or like change this copy, or compare examples and say, oh, I really care about what ANSYS says or what Equinix says. Oh, I like how they said it. I'm going to take their language. I'm going to put it in here. Great. Like, do all that. This gives you that first draft really, really quickly. And it's totally okay if you want to be mean to our AI. The AI is a junior consultant, needs this wrist slapped every once in a while, but it's working hard. So that's how the transition risk thing works. So what's new? These benchmarks are new. So you just can be very messy here. We cleaned it up and move it to the side. It still needs a little bit of help. It'll get a little bit cleaner in the next few weeks, but that's what's new. And then what's coming here, the main thing that's coming is it's called NGFS scenarios. Um, wait, where'd my Oh, there you go. This should actually be the roadmap. So what the real vision here is, or the roadmap here is NFGS scenario. So long story short, you have to do scenario analysis for a lot of these laws, especially in Europe and Australia, and we'll see what happens in the United States in the future. But when you're doing this transition risk assessment, you need to say, well, there's multiple scenarios of the future. If we are in what's called a hothouse world, which means like no climate policy has been passed, then I have very different risks, right? Like if there's no climate policy and there's no carbon tax and there's no carbon emissions regulations and there's none of that, well, then there's not really like a risk that you're going to get like there's going to be big enterprise customer sustainability requirements or a lot of regulations around climate that are going to force you to do this stuff. That won't happen because there's no policies. But there is more of a risk around physical risks, around failing infrastructure, or around high insurance costs. Because if there's no climate policy, then you can make the assumption that climate change is getting worse, which will impact you physically. But if we are in a what's called a smooth transition scenario, it's the opposite. If there's a lot of policy around the world that says that regulates emissions and sets a carbon tax and forces people to report on climate risk, well, then transition risks are actually a really big deal because you need to switch to renewable energy quickly, you need to measure your emissions quickly, you need to prepare for a carbon tax quickly, and those are a much bigger deal. But actually, physical risks in the longer term might not be as big a deal, if indeed we are solving the core problems of climate change. So what we want to be able to do is allow you to consider those different scenarios in this software so that you can, again, do something that would normally be months and months of work and $100,000 consulting engagement minimum in 2 minutes here, all sort of bundled into this one cost. To say, hey, first consider me under the, and it's probably happened here, like first do this in the outhouse scenario. And it spits out these answers. And you have your report like, here's what happens if there's no policies around climate change. And then it's now rerun this for um the the orderly transition scenario. Great, like high transition risks, no physical risks, excuse me, whatever. So that's what's coming. That'll probably come in the spring or so. Basically, the goal there is to get it in before Australia and before CSRD reporting, so that customers can use it online for that. Okay, so that was transition risks. Now let's talk about a last step here, which is reporting. So the problem is that writing these reports, TCFD in the US for the most part, IFRS a little more internationally, and maybe eventually in the US, takes a lot of time and expertise. It's not rocket science, like anybody can learn it. But you look at Asana's, where does Asana go? Well, whatever, here's Braze. You look at Braze, like, this is kind of long. There's a lot in here. Like, someone's got to write it. It's got to come from somewhere. Same thing for Asana. I think Asana's, which is not a very high emitting or like high risk company, Asana's is one, two, three, four, five, six pages. It's kind of a lot. It takes a bunch of time to write. You got to know the format. Pain in the butt. That is exactly what AI is good at. So in our product, AI basically writes this for you in seconds. So you gotta go to what it looks like. Instead of you saying, all right, great, a consultant did this risk assessment for me. Let me go write this report myself, or let me pay them extra to go write a report for me. We come in here and say, you did all this work inside of Beehive, let the AI draft its answer. And the AI writes whatever it writes. I'm going to discard this because I have a lot of versions here. The AI writes whatever it writes, but you're able to see version control in here. And so you're able to say, all right, AI wrote this first thing. But then our team, you can see my name here, our team is going to review this and make some changes because I don't like it. And then maybe someone on your team is going to make the next set of changes to make it a little better. And then your final auditor is going to do the last set of changes. Or your final um, senior person is going to make the last set of changes. And all that is tracked in here. And it's very easy. You just come in here, if you're on whatever version you're on here, and you're like, oh, I want to delete this word. You delete that. Great. You click save version, and now you'll see that updated to version 8. Voila, there you go. There's version 8 made by Adriel less than a minute ago. And you can go back and forth and see what the differences are. Um, so very easy to go back and forth there. Now, there's a couple things that are important here. One is you can benchmark in here, which is maybe unexpected, our most unexpectedly popular feature, where you're able to set up all these peers in the settings, and similar like that the transition risk thing I showed you. And you're able to say, hey, I really care about General Motors. Like General Motors is my main peer. How did they answer this question? And how does that compare to how I answer the question? What about this one? What about this one? What about this one? What about that one? And you're able to see that. And you're like, oh, I really like that question. Let me get some context. Great. Click here to see full disclosure, and it'll take you directly to General Motors disclosure around this stuff, and you're able to find that answer. So we try to make this as easy as possible to do this benchmarking in here. The way this mostly works for customers is like the very first time you get on a call with us, we draft this whole thing for you. We will do your physical risk assessment, your transition risk assessment, we draft your whole report for you. And then you can go into the summary report tab and you read it. And you're like, oh, yeah, I like that one. Oh, I don't like this question. I don't like how this phrase is. Great. You go to question. That's too many changes in here. You go to the question, you delete it, you do whatever you want. Great. You save it. Now you have this new version of the answer over here. You see I deleted all that, so that's the new version of the answer, and that shows up. And then what often happens is like your legal team doesn't really want to go into another software. It's not what they want to do. So right, you don't have to have unlimited licenses. We don't charge for license or anything. But if your legal team or whomever is just used to docs, great. You export this as a doc or a PDF or whatever you want, and they can make their final changes in there. So that's how this gets very useful. So what's on the roadmap? for reporting. There's two major things on the roadmap. The first is we right now support TCFD reporting. By late spring, we would be supporting IFRS S2 reporting. They're very similar. There's probably 80% overlap. The main difference is that under IFRS reporting, you have to quantify these risks. So everything we did here to get the dollar value, you have to actually talk about that in IFRS reporting. Few American companies are doing that right now, unless you're a large enough American company to comply with European or Australian regulations. But we'll see what happens in the US. It might come here as well. But that's the first thing around IFRS. And the second is not only do you need to identify your risks, but you need to talk about mitigating strategies for your risks. So this kind of disappeared because I redid this. Let's say I mark this risk as approved, and I like this is a risk I do want to disclose, and maybe this is a risk I don't want to disclose. Um, you'll come in here and you'll see that risk I marked as disclosing shows up here. For TCFD, that's fine. You just need to say, identify this as a risk. Here's the time horizon and impact and likelihood that it happens. For IFRS, you can say, and what am I doing about it? So there's a risk of what I call rapid technological displacement and disruption. Great. Then you do one more column that says, and here's how we are accepting it or mitigating it or addressing it or whatever. So that's the first step here. The second thing on the roadmap, this is going to be cool. So some of you might have seen, I'm going to open this up here. I had this post on LinkedIn a couple days ago about this new product we're going to launch. And just basically this new thing where you'll be able to, it's a free product, just like a free tool for people. You'll be able to upload your TCFD report and AI will give you suggested improvement opportunities, a gap analysis against IFRS 2. If you want to eventually do IFRS 2, you'll know what's different, and then you'll be able to benchmark. This posted really well. You can see 33,000 impressions, 330 people commented. Like people really were excited about this tool. A lot of people wanted it, so that was unexpectedly nice. What this tool is going to look like, this is just like a AI mock-up. The live one will be out on Monday or Tuesday. And of those 330 people, we're going to roll it out like 50 people a week for the next 6 weeks or so until we're like really, really confident in it. Probably a little faster. But we're going to do it in bits and pieces. What you'll basically be able to do is upload a TCFD report. Let's do this live. I think I have Braze somewhere in here. There you go. So here's Braze's report. And then you'll be able to say either tell me how to improve it, do that gap assessment, or compare me against peers. So maybe you'll say I want to benchmark against my peers and I really care about Walmart, whatever. You'll be able to say, well, here's how Walmart did, and here's how you did. With a lot of transparency about how this was calculated, the descriptions that matter, advice about what to do, some recommendations, whatever. Maybe you just want to say, hey, how can I improve? Like what did I not do well enough in? What should I be aware of? Where might an auditor slap me on the wrist? Well, here you go. Like in governance, here's what you probably should improve. In strategy, here's what you should probably should improve. And the real designs for this are amazing. I mean, they look really good. Our engineers were showing it to me earlier this morning. They look very good. So this is like an ugly AI thing that I put together, but the real one's going to be really awesome. And the goal here is to just give a free tool to people to be able to say, hey, if thousands of companies did their first ever TCFD report this year, how do you know? Is it good? Is it bad? Is it whatever? Here's a way you can easily just check it out and see some what prompted AI thinks about this. And again, the difference between doing this in Beehive and in ChatGPT is basically that ChatGPT, you don't know what it's based on. ChatGPT, you don't know what it's based on. In Beehive, we give this very limited training data. So we give it training data from the actual guidance of the TCFD, the actual IFRS. We'll reference those things. We'll explain them with a bunch of visual ways. The formatting is really helpful. You'll be able to download this as a report. It's not going to spit out a bunch of text you don't understand. It'll like prioritize things for you. So it'll be really, really cool. So I'm very excited about this. Again, this is going to launch on Monday or Tuesday. If you're on this call and you want one of the earlier versions, just shoot me an email or something and I'll get it to you. And this will be free tool. This will just be on our website for anybody. Okay. So I think that is everything I want to talk about today. I'm going to pause for a minute and just share a couple things as if you guys have any questions. As a reminder, we do this pretty much every Tuesday. This is our last one of the year. I'm supposed to have a baby in a couple weeks. So we're going to pause for this year. But we got a lot coming up. So anybody can go Where do I want to go? Anybody can go to this page and see some of the events we have coming up that I'm going to put in the chat. You'll see some good ones here. So we have an interview with a partner at a law firm, the issue partner at a law firm, with the Workiva team, with Braze, and many other cool ones coming up. Somewhere on here is going to be Universal. There you go, Universal Music Group, which will be, I think, very cool. Kira is amazing, and you guys, I'm gonna especially highlight this one because Kira is really wonderful to learn from. So that'll be really cool. The other thing is, I wanted to share this course that we have. You go to our homepage and you go to ECRM course, just resources ECRM course. We have this free 6 weeks email course. We can learn about enterprise climate risk management and teaches you about these laws, about transition risks, about physical risks, like everything kind of ran through as quickly and as succinctly as I could today. It just dives into a little bit more. So a good way to learn about what's going on. So hopefully you can sign up for that and that'll be a helpful tool for you. A lot of cool case studies in there and examples and real live like ideas that you can take into your business. So I think, yeah, that was everything. Um, I'm happy to stay on for a few minutes, answer any questions. My mouth is tired, so I'll give you a second. But if you guys want to talk about anything or the product or what's coming or not coming or working or not working, or you want to yell at me and give me some feedback, I'm okay with all of it. Oh, there you go. Somebody sent me an email asking for the TCFD thing, so I got you. Absolutely. All right. If there's any questions, like raise your hand so I know that you're working on a question. Maybe you're just typing it out. I'm gonna stop sharing my screen for a minute. Sometimes it takes folks a minute to type. But if not, all right, perfect. I appreciate you all joining. Thank you very much. We had a wonderful group today. Reach out anytime. You can always find me at Adriel@beehive.com. Thank you. If I can be at all helpful with the product, or if you want to talk about what's going on, you know where to find me. I hope everyone has a lovely holiday. Thank you for that little applause, whoever gave that. I hope everybody has a lovely holiday, and I'll talk to you soon.